Premani, and today we are going to look at the structure of gold. So, what is where we are standing? April 14th, Tuesday. It's 1:54 standard right now, Pakistan time, about midnight in US. And let's move forward. Let's look into what's going on. So, this is a gold structure on a 4-hour chart, and I've drawn kilowatt waves. This is an impulsive wave, wave 2, the largest wave, wave 3, normally after which there is a wave 5. But this time, what you see here, there is another interesting thing going on. Is after this point, there is another fall, but the fall is not up to wave 4. So, Elliott wave is still validated, and now after this point, it will go back up to chase, and wave 5 will slightly be higher, but at least it will ride up. Now this is a big time structure, so gold overall is in a bullish rally. Okay, now we see another structure inside structure, and let me remove this so there is no clutter. uh, on an overall level, now we see here that Elliott wave, which is a kind of strong mathematician like WD Gann, and they were billionaires in their own undocumented form in 1980s. That's why many of the things are not even published. Neither they taught what they knew, but they were super mathematicians. And now we see the trend is shifted. People like NASA scientists and physicists are getting into trading. So obviously it's not gambling, but it's not everyone's cup of tea. We still learn it, we still make mistakes, but anyways, one should strive to find logics rather than working on gambling. Uh, so that was overall structure, right? The broad structure of Elliott wave, where wave 4 is retraced fully on a Gartley level, and now it's going up to wave 5. Now inside this, since people who trade future trade smaller brackets and with higher leverage, there is always a wave inside wave. So the wave inside wave is this was wave 4. So I'm marking here in orange. Now inside this we see this is wave 1, 2, 3 being the highest, 4 is the retracement, and we have checked the retracement on a Fibonacci level. It is completed wave 4, wave 5 impulse. Now we see wave 5A, corrective wave. And there are 3 corrective waves and 5 impulsive waves. So now this is taken care of, and now this has retraced to a point where we see, and we have tried extrapolating another trend line. That trend line has 3 points, one on 5 and the other on 5e. So most likely, if we are trying to enter shorts here, we will try to enter short in a way that we say, okay, our stop loss bracket will be on 5, and we will try to let it retrace to at least the first leg of Fibonacci. That's the plan. Okay. And then what happens is, after it has done the retracement, then this minor wave inside bigger wave is completed. Then you can enter into a long call, and again you can manage your risk, do a stop loss to this point, and then you can ride all the way up to where the wave 3 was. Okay, and this would be a very big 1 is to 5, 1 is to 6 ratio, because this will not retrace, but we for a safety zone are doing it till the last leg. So it might fall to here, here, or golden zone. You have to wait and watch, and then take the long entry. So we are giving you two setups. One setup is here, where you see and line might break out and then it might fall because it has to retrace completely. So just wait and watch and let it fall to at least this point, the first leg. And still it's a gold 1 is to 1.38 risk reward ratio. So today, April 14th, we had talked about two setups. One that would take about one less than a day, and then other that would take about mostly this to this about 2 weeks time to get back up, and gold will be back on 5800. So hope this helps you. Farid, Premani, take care.